Welcome to our channel. In this part 3 of our series on SBLCs, we will discuss how to apply for a standby letter of credit. Let's get started. First, let's discuss the documentation requirements. The application process for an SBLC requires meticulous preparation of specific documents to ensure compliance and facilitate approval. Key documents include: Number 1. Application form. Complete the bank's SBLC application, detailing the transaction and beneficiary information. Number 2. Business financial statements. Provide recent financial statements, including balance sheets and income statements, to demonstrate financial health. Number 3. Trade contract or agreement. Submit a copy of the trade agreement or contract necessitating the SBLC, highlighting terms and obligations. Number 4. Creditworthiness evidence. Banks may require evidence of creditworthiness, such as credit reports or references from other financial institutions. And finally, collateral documentation. If collateral is required, provide documentation such as property deeds, stock certificates, or other asset valuations. So let's say you were able to collect most of the required documentation, but your collateral documentation shows deficiencies. You now must address the issuing bank's collateral requirements. Collateral is often necessary to secure an SBLC, especially if the applicant lacks sufficient capital or has a limited credit history. The value of the collateral must usually exceed the SBLC amount, with banks setting specific loan-to-value (LTV) ratios. Acceptable collateral types typically include cash deposits or savings accounts, marketable securities, stocks, bonds, real estate properties, other liquid assets deemed acceptable by the issuing bank, and off-take agreements with credit-worthy corporations. If even after providing proof of all types of acceptable collateral your creditworthiness is still lacking, you will need to raise additional capital to meet or exceed the required collateral. Options for raising capital for collateral include debt financing, secure a loan or issue bonds, leveraging the company's creditworthiness and future cash flows. Equity financing, raise capital by selling company shares, diluting ownership but not incurring debt. Asset liquidation, convert non-essential assets into cash to meet collateral requirements without taking on new liabilities. Once the issuing bank's documentation and collateral requirements are met satisfactorily, your application for an SBLC will soon be approved. As mentioned in Part 2 of our SBLC series, an SBLC, once approved, typically take 48 hours to be released. For businesses seeking flexibility, or those unable to meet SBLC requirements, there are alternatives to SBLCs, such as revolving credit facilities. A revolving credit facility is a type of credit that enables you to withdraw money. Use it to fund your business, repay it, and then withdraw it again when you need it. It's one of many flexible funding solutions on the alternative finance market today. In simpler terms, these facilities provide a pre-approved credit limit, allowing companies to draw funds as needed, repay, and reuse within the agreement period. This option offers liquidity without the need for a transaction-specific guarantee. As we have showed you, obtaining an SBLC is daunting and complicated, which is why we recommend you retain the services of a professional service well-versed in the ins and outs of SBLCs. Notwithstanding the difficulties, SBLCs are well worth the effort to obtain. Contact us at GTF Solutions Inc. for assistance with and further information on SBLCs. We'd love to hear from you. Thank you for watching our channel. Please visit our website and social media accounts for updates and other information. See you again next time.